Welcome back. You're watching the newsroom on ET Now. Yet another corporate that has delivered its Q2 numbers, and that's Union Bank of India. Let's bring on board the management of Union Bank. Rajkiran Rai, the MD and CEO, joins us now. Mr. Rai, thank you so much for joining in. It was a stable quarter for for the bank, which is great. The profits prior to provisioning, though, did rise by roughly about 2% year on year, as mentioned in your presentation, and that's lower than peers. So what's the reason for this?
It is not strictly comparable, but I think performance of the bank in all areas have improved, actually, if you look quarter on quarter. So previous year is not strictly comparable.
On the deposits front, Union Bank again has grown at 4%. Why is it that some larger private banks are growing in the 15 to 20% and your bank at 4%?
Yeah, actually, like the KASA is growing at around 12%. The retail is growing at around 8%. Even though deposit growth is around 4%, bit muted because we are not focused on time deposit growth because we have surplus resources. And otherwise, if you look at the KASA, the growth is very good. On the credit side, we are growing close to 2% because the first quarter was almost a negative growth. So we are picked up, and we hope that we reach about 4 to 6% growth by the end of this financial year. On the deposit also, we expect to reach about 8 to 10% growth. If you look at the operating profit, we have achieved a operating profit of 4,735 crores this quarter. So this is a substantial improvement over previous quarter, and we expect that the number should be stable around this. Even net interest income, actually, there is a growth. So more or less, actually, it is very, very stable quarter. And we have made very good provisioning on the expected slippages. So even this quarter, we have made about 420 crores provision for the expected slippage of September, which was not recognized. Plus, we also made another 150 crores provision for the interest accrued, but then likely to be reversed if the accounts get recognized as NPA later. So I think the balance sheet is quite strong, robust, and we reached a provisioning cover level of almost 83%. That indicates most of the legacy accounts, we have reached a very decent level of provisioning. So there is not much pain left in the book now.
Mr. Rai, infrastructure, NBFC and HFC account for about 37% share of your domestic advances. So what's the outlook in these segments?
Yeah, both these sectors will grow, and we are positive on both the sectors. We have sanctioned pipelines both in infra and NBFC. Now there are better regulations, there are better systems in place. These sectors will play a major role in credit growth.
What's the outlook on asset quality and credit costs for this year? What were the pro forma numbers, and also what's the outlook on levels of provisioning going forward?
Yeah, this is something we have given clear projections. Initially, it was expected to be a bit high, but now we have given a projection that the delinquency can be anything between 2 to 3%. The 2 quarters are already over, and we have a fair idea. So it is not as bad as it is expected to be. So I think 2 to 3% delinquency is expected. So maybe Q3 will give more clarity because most slippages which will happen because of the COVID impact and other impacts will happen mostly in December. So, but then we have adequately provided for the accounts which are already marked, which are likely to be NPA. So I don't see much stress going forward.
Mr. Rai, thank you so much for joining us today on ET Now to talk about your numbers.